Housing values rising at the fastest pace in more than 2 years. Madness. So Australian home value growth hits the fastest pace over 2 years as national dwelling values surged 1.1 in October, making it the strongest monthly gain since June 2023 and pushing the annual growth rate to 6.1. Expanding deposit guarantee scheme intensifies competition for more affordable properties. We know that that has made a huge impact. Swift value rises mean capital city median home values have already offset the boost to borrowing capacity for median income households from earlier rate cuts. The pace of growth in Australia home values accelerated in October, rising by 1.1%, the fastest monthly gain since June 2023. So before the February rate cut, housing conditions were losing momentum, even recording flat to falling values through late 2024 and January 25. The first rate cut in February marked a clear turning point, with home values moving through a positive inflection across most regions and gathering steam since then. Monthly gains have been broad-based, with every capital city, rest of state region recording a monthly rise in value ranging from 1.9 surge in Perth being the best performer. We'll reflect on that in a sec. To 0.3 rise across Hobart. Across the combined capitals, the 1.1 gain seen in October equates to an increase of just over 10,000 in median dwelling value over the month. Since February, capital city dwelling values are up 5.9 or approximately 53,700. There are so many factors contributing to stronger housing conditions. Such tight advertising supply levels against above average levels of demonstrated demand have skewed selling conditions towards vendors through spring. So we know that the biggest catalyst for this is short supply. Massively short supply nationwide. The step up in growth rates also coincides with the expanding 5% deposit guarantee scheme, which has put things on fire. What else can I tell you? Stronger housing demand at the lower price points is likely a culminating of serviceability constraints. So, of course, it will catch up. And we're going to talk to Terry, of course, and Sandy and get their opinion on this. But I just get the feeling that money is too cheap. And somebody's going to have to pay at some point. Let's hope it's not this year. Regional markets also posted a solid increase in the monthly rate of growth. Let's see what's happening in the rental market, with vacancy rates holding strong, record lows of 1.4% in October. Rental growth is once again pushing higher on a seasonal adjustment basement. So totality is who we get our reports from. National Rental Index has risen by 0.5% per month over the past 3 months, the highest monthly growth in rents since May 2024. Unit rents are rising faster than housing across most cities, which is also interesting. Although rents are re-accelerating, housing values are rising faster, which has placed renewed downward pressure on gross yields. At 3.4%, the gross rental yield recorded across capital city dwellings has reduced to the lower level since October 2022. And of course, the gross yields are higher in the regional markets, being 4.33 in October, which is also the lowest since October 2022. Interesting. What else can I tell you? Let's have a look at Perth, and then we'll flick over to our cornerstone attendees. So Perth sales transactions in Perth last week were up 2.1%. There were 2,869 properties for sale in Perth, which is 2.1% lower than the previous week. House listings decreased 1.3% compared to the week prior. There's just no stock. And the Perth rental market reported 2,067 properties for rent in Perth, which is 5.1% down on the week prior. Last week's rental listings figure is 5.1. REWA member reports 770 properties leased last week, 24.9% higher than 4 weeks ago and 19% higher than a week ago. So what else is happening? Let's just have a look at some of those independent stats. So Sydney, 0.7 for the month, 2.3 for the quarter, 4% annually. Melbourne, still trying to get off the ground at 0.9 for the month, 1.6 for the quarter, 3.3 growth annually. Brisbane leading the charge annually, 1.8 for the month, 4.9 for the quarter, and 10.8 annually. Adelaide 1.4, 3.2, 6.7. And little old Perth 1.9 leading the charge monthly, as I mentioned before, 5.4 for the quarter, rise, and a whopping 9.4%. If we look at median house values, obviously Sydney still leading with 1,256,000 average home value. Second is Brisbane with 992. Perth is third with 884. Fourth is Adelaide with 867. And Melbourne is showing great value at 818,000. So if you're looking to invest, maybe Melbourne might be the place, because we know that they are usually up at the top with Sydney. So certainly a cool off. And hopefully we'll have Dan, our man from Melbourne, swing in today. And then we'll have a yarn with him about what's going on over his neck of the woods, because it's always very, very, very interesting. But that's from Cotality, Home Value Index, and of course REWA as well. Let's have a quick look at New Zealand. We do have a few members in New Zealand, but we'll just have a quick look at what they're doing. So values up modestly for 2 months in a row, which is nice. They've had a downturn for 2 years. Property values in Aotearoa, New Zealand, ended up at 0.2% in October, the second modest rise according to Cotality, which is good. Auckland rose by negative 0.2%. Tauranga and Wellington 0.2%. So modest, very modest lifts off the ground, but still struggling. And remember, they had the 50% rise, and what goes up must come down.